Now, many economies around the world have beaten COVID blues, charting a path of growth, but China's economy is still weighed down by strict implementation of COVID rules. Now, reports say the growing financial distress in regions across China is raising the risk of local governments defaulting on bond payments. Many of China's local level governments have been struggling with tight fiscal budgets for years. Strict COVID lockdowns have limited the economic expansion, and revenue has fallen for many local governments distributing their fiscal mathematics. Now, local land sale revenues have fallen significantly in provinces, and experts now predict local authorities to cut back on spending on public services to keep a healthy balance sheet and avoid large deficits. Now, the biggest stress the local governments face is from the revenue loss in the property sector. Between 2021 and 2025, roughly 3 trillion yuan or $415 billion worth of bonds will be sold by local government financing vehicles, and the repayment pressure has become increasingly significant. The delay in the interest payment has raised risks of the possible bond default in the listed market. Now, some parts of China, including Changsha district in the southwestern municipality of Chongqing and Yanjiang city in the Sichuan province, have started charging people to stay in centralized quarantine facilities that were previously funded entirely by the government. Beijing has pushed local governments to borrow at record rates to construct infrastructure projects in a bid to boost local economies and thereby the national economy. There are reports of disruptions to public transport services in provinces of Henan, Hunan, and Guangdong due to the financial troubles, and these problems reflect growing challenges facing some local governments. China's growth has been slowing, and the world's second largest economy is not expected to meet its annual GDP target of around 5.5% in the current year.
WION, now available in your country. Download the app now. Get all the news on the move.